So we're going to record this and share it with your fellow classmates and with others through the Engage blog. And so I'm Andy Lieberman, part of the faculty at Claremont Lincoln's Master of Social Impact program. And I'm really pleased to introduce our invited guest this evening, Nat Robinson. So Nat is the founder and until recently was the CEO of Juhudi Kilimo Company Limited, which works with smallholder farmers in Kenya. And over the years he was running that organization, he received support from a lot of the biggest impact investors like Acumen Fund and received numerous awards, including the very prestigious award for Social Entrepreneur of the Year by the World Economic Forum in 2010. So he's really somebody who as you'll hear, started humbly, but worked his way up to have some great success there in Kenya. And he's recently moved back to the United States and actually wrote a book called Creating a Cash Cow in Kenya. So thank you for being here, Nat, and joining us. And I guess we'll just, I'll start with a few questions and then we'll bring in others. But, just to start out with, how'd you end up in Kenya? I mean, was this like, since you were a little kid, did you always know that you wanted to go off to Kenya and work with cows and farmers, or how'd you end up there?
Thanks, Nick. Good question. Thanks so much for inviting me. It's an honor to be here and great to learn about the program and the school. And I've known Andy for a while, so I'm very happy to be a part of this and answer questions. But I think like a lot of things in life, it's sort of you make your plans and then things go in other directions and happen in other ways. And so I had recently finished my MBA in the U.S. At Vanderbilt, and during that time I had been involved with Net Impact, and it was a student group out there that really kind of resonated with me. In my work before business school, I was in philanthropy. I worked for a foundation, so I was very familiar with sort of the nonprofit and donor side. I wanted to get some more of that business experience. And after business school, went into management consulting out in DC, and kind of through that experience came across an opportunity to work in Kenya for 8 months with the IFC of the World Bank. And so the IFC was investing in companies in East Africa and in social enterprises, specifically in Kenya. And I thought, well, that sounds like a great opportunity, but boy, 8 months is a long time to be away from home. And not sure if I can handle that. I've never been to East Africa before. I traveled a lot before that, but thought this is a good opportunity while I'm young. And quickly fell in love with the country and the region and the people and everything about Kenya. And as I was looking for companies to invest in for this fund, I came across this local bank and local microfinance organization that was lending to rural smallholder farmers, and really liked the concept and the idea, and just kind of jumped right in, not really knowing what I was doing. And 6 years later, I kind of spun this initiative off into a for-profit company, and really loved the whole journey. But it was also had some challenges along the way.
Yeah, I'm sure there's a lot of challenges. It's a long time to be there. So tell us about Juhudi Kilimo. And I know Juhudi Kilimo does micro asset financing, which is, I think for the audience here, maybe you could start with explaining kind of what classic microfinance is, how that works in a place like Kenya, and then Juhudi Kilimo's take on micro asset financing.
Sure. I know we have a variety of academic and professional backgrounds, so I'll try to explain it all. But Juhudi Kilimo, first in Swahili, Juhudi means effort, and Kilimo is agriculture. And so it actually doesn't mean anything. But I threw in the Kilimo part of the name, but so it's sort of effort in agriculture, a hardworking farmer to the name. But what it was is, when I was working with this bank, they were leveraging sort of the Muhammad Yunus, the traditional microfinance model that was developed in Bangladesh and then expanded in India, and they're bringing it to Kenya. And there was this idea of providing small loans to groups of people, predominantly women, and providing them with $50, $100 loans, and letting them go and invest those in their businesses or their activities. And instead of taking collateral like a normal bank would, the group would act as sort of that that collateral. So if one of the individuals in the group defaulted on the loan, the rest of the group members would pitch in to help pay, to make payments on that loan. And that was sort of the success that grew out of the 80s and 90s and has now become big industry around the world as a way of helping the poor to invest and grow incomes and to alleviate alleviate poverty. And so what Kenya, the KREP group did is the bank is they took that model to Kenya and changed it a little bit. And we're trying to use microfinance in different areas, in different sectors. So they're using kind of the same group lending with youth, with at-risk youth in the urban areas, as well as in agriculture and in urban slum housing. So a bunch of different projects are going on. And the agriculture model was one that I really liked. This is what eventually became Juhudi Kalimo, is where we would give a loan for a rural farmer to purchase an asset. So a dairy cow or some poultry, the day-old chicks for chickens, irrigation equipment, any kind of asset that would help generate income by selling milk, by selling eggs, or by helping grow crops that could then help pay off that loan, but also that asset could become the collateral on the loan. So if that farmer couldn't pay, we could just repossess the cow or repossess the irrigation equipment and at least leave that farmer in a similar position they were before they took the loan. So it was a very low-risk way, for us as a financial institution and also for the farmer, for us to get into these very remote, rural, low-income communities and provide this source of income and do it in a way that's a little bit more responsible than some of the other lenders around the world. I know microfinance has been criticized a little bit for people in debt and putting so much social pressure to repay that people commit suicide or that they borrow from multiple institutions to repay their loans. And this was a way of sort of sidestepping that because we are financing the asset. You have that cow at the end of the day to that hopefully will generate enough milk to pay the loan, but if it doesn't, we can just take it back and resell. And it turned out to be a very, I think, powerful model within Kenya.
So what kind of repayment rate do you have? Because I know not everyone can have similar challenges.
That's what's unique, and that's what's kind of the magic behind microfinance is that surprisingly that model, that group lending model, was extremely successful and that the default rates were very low. 98, 99% of the loans were being repaid on time, which is higher than most of the bank loans. And the same with us. And in Kenya, our repayment rate was sort of the 95 to 98% repayment rate, whereas for the country as a whole, and in agriculture, it was much lower than that. So it's a very great way, at least on those numbers, repayment rates were very high.
That's great. Yeah, Anita, you want to ask a question?
Yes. So, Nat, I taught in the Mandela Washington Fellows Young African Leaders Institute, and one of the fellows was from Kenya. And of course, Kenya is very large, and I'm not going to ask you if you know him, but I want to share with you his project, of which now he has expanded into this huge, huge program. When he was a young boy, his grandmother gave him a hen, and in order to make money, he mated the hen or do whatever they do, and was able to develop some eggs, of which he sold to buy books and clothes to go to school. And it's called the One Hen Project. And so what he does and has been doing for a number of years is bring in children with their parents, and each child is given a hen. And they can do whatever they want and make money as much as they can from this one hen, only with the stipulation that at the end of the year, they return or give another hen back. And this guy has gone on to create an egg factory and fertilizer factory. I mean, this is a young kid we're talking about. I mean, he's got to be in his 30s still now. I met him when he was young. So the model that you're talking about apparently has really taken off and is a good model to do in places like Kenya or other countries that have a lot of agriculture or farmers. Is that correct?
Absolutely. No, that's great. It's like Heifer International is the NGO that's been pushing that model where you have a cow and then you donate one of the calves to your community. And I think that's what's great about this whole, the whole concept and just looking at agriculture as a source of, source of business and source of income is that traditionally, it's not seen that way. A lot of the families are not encouraging their children to get involved in agriculture and business because it's seen as sort of a subsistent way of living, and then they send their children into the cities, and that creates all kinds of other challenges. So it's kind of changing a little bit of that mindset, and then starting young, starting with the youth, which is what I love about that program, is that it really does get kids involved in seeing that you can use farming as a business and create your own wealth and your own way to invest and save and invest in your own education. It's very empowering. So thanks.
So yeah, now could you say a little more? Like, I have a hard time thinking in like hens and cows. I think in dollars. Okay. I mean, translating some of this, like, what difference does it make in somebody's life to have these? In your case, say the cows or the eggs or the milk. I mean, what are the dollar amounts, and what is the difference in people's lives that this is really making?
Yeah, and to kind of step back a bit too, just to look broadly at Kenya, as a country, 75% of the workforce is engaged in agriculture, yet the productivity is very low. A lot of the small-scale farmers are not able to produce enough food to keep up with their peer countries, and then what results is that the country, Kenya, imports food. And if you look at the reasons why a lot of this productivity is low with the farmers, about 2/3 of the farmers do not have access to any kind of finance or formal financial services to invest in their farms and to grow their activities. And these are, small-scale farmers that are living on 1 to 3 acres of land, or very subsistent, or just growing enough to feed their families. Maybe they're selling a little bit more to the market. And so then you come in and provide a loan to one of these farmers. Say for the example I always give is that a normal local cow would cost about $200. This is a Zebu breed and generate about 2 to 3 liters of milk a day. So that generate around $1 a day in income. And so what we would do is finance a hybrid cow that costs about $500. And this cow would produce 10 to 12 liters of milk and earning $4 a day, $4 to $5 a day, depending on the market. So you're dramatically improving their income just by increasing the amount of capital they're able to borrow. So you're quadrupling their income, and that's just the first cow. So once it usually takes our farmers about 12 to 14 months to pay that cow, including the interest and fees and everything else. And then once the loan is done, that farmer continues to own that cow, can continue to make money from the cow, plus all the calves that cow is creating. So after 2 or 3 or 4 loans, you get a farmer who's gone from, and we've been able to measure this with our Progress Out of Poverty index tool, is come from very, very low income, $1 to $2 a day, to $4, $8, $12 a day. So a dramatic change, at least in the income levels, and that's usually then reinvested back in the family and the household. Plus, you've got a source of food and nutrition from the cows or from the hens or whatever you're producing at the farm level.
Yeah, that's great. So, impact measurement's a big part of our programs, especially in the social impact program. Can you say a little bit more about the Progress Out of Poverty Index and what else you were able to do with impact measurement?
Mm-hmm. And that whole story was interesting for me. So coming into this world, I didn't know anything about impact investing or social entrepreneurship. I had a little bit of business experience and some nonprofit experience. And I was under the assumption that these impact investors would want to see all this rich data and so we could tell our story and explain that, yes, we are a business, but we're also helping our farmers, and here's the results. And in reality, we didn't get pushed at all by these impact investors. They were only interested in the business side, and sort of by default, they assume since we're in microfinance, we're working with rural farmers, we came out of a nonprofit, then we should be having a positive impact. And plenty of, anecdotal stories about, or just, stories about our farmers who are doing well, as I just kind of gave that story about the cows, but no real way to kind of put that into data. And so I was surprised that the investors weren't asking for that or pushing it or investing in it. But, so we as management made the decision to start capturing more of this information. One, to make sure that we were actually having a positive impact on our farmers, but also to get to know our clients and our farmers a little bit better. So we looked for a lot of tools and all kinds of research and things available out there to deploy to help measure your impact, as I'm sure you guys are all learning and experts about. And the one that we sort of settled on, which wasn't perfect, but seemed to be more globally accepted, was the Progress Out of Poverty Index that had been developed by the Green Foundation. And it had been tailored specifically to Kenya as a way to sort of get a general proxy of kind of our clients as a whole, where they sit in the kind of in the poverty scale. So you can get kind of a broader assessment of where our clients are, but also we could use it to target our clients, so to specifically go after the lower income clients, and then over time then start to measure that change in theory. But it's very difficult. It can be very expensive to get those, that data that everyone really trusts. The real way is to get these big randomized control tests and a number of years, and that can cost tens to hundreds of thousands of dollars to do. And I think that some of the reluctance on our investors' side to promoting all that, if it's going to put extra strain on the business. So we really took that on ourselves, and we're able to do it in a way that was fairly cheap. We developed a technology that would send out text messages to all 20, 30,000 of our farmers and get real-time responses from our farmers, because everyone had a mobile phone. So it's a very easy way to do these quick surveys, and farmers love doing it. And in addition to kind of the short answer, we would leave open-ended sections. We would just get paragraphs of responses from our farmers, just typing away on their phones about things we can improve, things that didn't work, things they want to see, which was just great information for us as a business. We sort of tied the impact monitoring piece into the general business and kind of the market intelligence and understanding our customers, so we could develop new products and just improve as a business.
Yeah, that's one of the things I've seen in my work with social entrepreneurs over the years, is the ones who are able to integrate the evaluation and the impact assessment in the business. You're able to do it with all or most of your customers. And if it's this kind of separate thing that you're waiting to raise money for a randomized controlled trial, it just, there's never time or money for it. So it sounds like you were really leveraging mobile technology, which of course we know Kenya is one of the leading countries in the developing world in use of cell phones. And that actually ties into a question that David asked even before you mentioned mobile phones. He wanted you to comment on M-Pesa, the mobile phone-based money transfer system. Did that factor into your business, and maybe explain it for those who aren't familiar with it?
Yeah, sorry, I just pulled up the group chat, so I haven't been monitoring those. I'll go back to the other question too, is yes, we are teaching our farmers. It's not just access to finance. We'll also do a lot of the financial literacy training. We connect our farmers to agriculture experts so they can improve their farms. So it's a combination of both the financial services and some of the training and teaching, because a lot of our farmers, it's their first exposure to a formal financial service. So there's a lot of literacy that needs to kind of be transferred. We do that all at our own cost. But definitely M-Pesa became a very big part of our business. It's a big part of life in Kenya. And as we were getting started around 2007, this was a year after M-Pesa really started to take shape and expand within the country. And especially when you're working in rural areas in remote parts of the country that don't have the bank network and sort of access to a lot of the infrastructure that the rest of the country has, it became very critical for us to rely on the technology to access our farmers, to allow our farmers to repay their loans, to disperse their loans, but also to monitor. And so we, in addition to integrating M-Pesa, and for those of you, I'm sure everybody's heard of it, but this is the way to send money on your mobile phone, and it works incredibly well. It's accepted all across the country. There over 80,000 agents or little cash points at every little corner store where you can either load money onto your phone or exchange your virtual money for real money. And it just became a very important part of the economy. And so we picked that up, and then we also equipped all of our loan officers, about 75 of our loan officers, with Samsung tablets, because they could all connect to the great 3G network that was throughout the country and access our loan tracking information. They could take pictures of our clients and run appraisal, do the appraisal data, but then also screen training videos for our farmers and for groups that we would produce elsewhere, and then give that as access to our farmers so they could learn about how to better take care of their cow, and a bunch of other things. So these tablets became a nice window into the kind of technology for some of our farmers. And I thought, this is never going to work. We've got 75-year-old, 20-year-olds with 75, 20-year-olds with these tablets on back motorcycles all throughout rural Kenya. They're going to drop them in the mud. They're going to get stolen. They're going to lose them. In the first year and a half, we only lost one tablet. So it was everyone took very good care of them, and I think worked very well, and it became a backbone of our company, along with M-Pesa.
That's great. I think you have a better technological backbone than a lot of companies here in the States. So you mentioned, I think you said 20 to 30,000 farmers you were reaching and 75 field agents. How big, by the time you left Juhudi Kilimo, how big was the company?
When we started, when we had spun off from the bank, we were about 9 employees in the head office, and I think another 7 or 8 in the field, and a handful of field offices, and about 1,000 clients, because we had started as a nonprofit, as kind of a pilot program within this microfinance bank, and then converted to a for-profit. So we spun off and then started to grow. We did that so that we could scale and access commercial capital in the capital markets. And then we grew to, when I left, we were 20 offices, and this was last year. So 20 offices, about 175 staff in total, and then around 23,000 clients. And I was just back there a few weeks ago. They're over 30,000 now, and I think at 22 offices and a few more staff too. So they're continuing to grow and expand. So it was kind of fun to see all that happen.
That's great. Yeah, please, everyone, I think you can we're a small group, but you can just take yourself off mute and ask a question anytime. So Anita, you wanted to ask something?
Yes. The model that you have described, Nat, is just fantastic. I love it, and I hope that it continues well after you, because you've left. I hope that it will continue. I'm curious because I've worked with now for 3 years, 3 different summers, and then here in the States, and then over in Africa, with social entrepreneurs. And they're not in agriculture, other than a couple one that I mentioned and a couple of more. Some of these social entrepreneurs are not going to make it because, as we know, it's so difficult. You were able to reach into the needs through agriculture, and that is just there's such a need for milk and eggs and agricultural products, and not necessarily the kinds of services that social entrepreneurs are coming up with. There are some incubators throughout Africa and in Kenya. I know in Ghana, I went to a couple of them, and I know in Kenya the same thing, that there are a couple of incubators, Impact or Hub, whatever they are. So taking the model that you have, is there a way that we could be helping these small social entrepreneurs develop into their businesses through impact investing, but through somewhat of the kind of model that you're doing, which is reaching out to one at a time, but then expanding out to others. I don't know, I'm just dreaming because I met so many social entrepreneurs who have such great dreams, and I wish that I could help. So I'm just curious your opinion about the fact that there are so many social entrepreneurs there with ideas that don't have anything to do with agriculture, but are just still very important.
Yeah, that's a good question and a big one. And, I'm certainly a sucker for it too. I'm very passionate about the space, and this is the reason why I participate in groups like this, is because and looking back at my experience too, it was incredibly difficult. I struggled at every step of the way. And as soon as I thought we were, through all the tough stuff, we had made it, another challenge would come and collapse everything. And I thought we wouldn't make it. And then we get through that. And then right as we're through that, another thing comes. So it's just really difficult. It's, I think, much more difficult than starting a for-profit company in a lot of sense, because you're balancing this impact model, and a lot of times it means slimmer margins, less access to capital, much bigger challenges in terms of scale and growth, and accessing and hiring staff and getting the right technologies and people. So it's a very tough thing to do, and then you add on environmental and the country that you're working in. Sometimes there's challenges there with infrastructure and corruption. So I feel for all the entrepreneurs who are out there going through the struggle, and that was a big reason why I wrote the book that I did. The purpose of that book was to get a lot of those stories out there in hopes that it helps a lot of those other entrepreneurs, because I didn't know anything. I didn't know at all what I was doing. And I had an MBA and I had worked for a while, and still struggled the whole way, and I couldn't really find a lot of resources at the time. I think there are a lot more now available through the incubators and accelerators, even the GSP group that Andy was involved in. And I'm currently a mentor with Unreasonable Institute that has an operation now in Uganda. They work across East Africa. They're originally from Colorado. I've worked with Village Capital, which is another global incubator, and then just kind of ad hoc. I'm always open to advising and connecting with the entrepreneurs, because I don't feel like someone should have to go through those same kind of challenges that I did. So I hope that the book is helpful, and if that's something that maybe you can offer to some of these entrepreneurs, is to let them read the book and hear firsthand some of the stuff that I went through and some of the lessons I think I learned from it. I really hope that that's a way of helping out. But I do agree. I think that's, I hope that continues to expand and grow, and that kind of network and infrastructure and ecosystem continues to build and foster and help those entrepreneurs. Because you look at what's happening in Silicon Valley and the rest of the world, I mean, there's all kinds of support for entrepreneurs. And so I hope that's sort of where we get to social entrepreneurship.
Well, that's great, Nat, and I think we appreciate you. Since I first met you a few years ago, I could tell you were somebody who was not just trying to capture things for yourself. That you've always been a very giving person, and wanting to let others learn and benefit from all the hard knocks you've taken and all that you've learned over the years. And it's one of the things I really admire about you. And I think one thing that gives me some hope for this, although we have to take kind of the long view, this space is still really new. Even the term social entrepreneurship is still relatively new. 10, 20 years ago, 20 years ago, I don't think even existed the term as social entrepreneurship. So this ecosystem, this sector is still kind of coming into its own. And I work here in Silicon Valley, and a lot of the people I work with are venture capitalists who kind of grew up in the venture capital world. And they remind me that and this is where we are with social enterprise and impact investing, is kind of like how venture capital was maybe in the 1970s or 1980s. It was happening, but it was still very ad hoc. And it's just kind of now become this very defined, well-defined space that everybody knows pretty much what the rules are, and you can navigate it more easily. So I think we're getting there with social enterprise. I mean, I've been involved now for quite a few years, and you can see the progress. Of course, it's not fast enough because we're so, those of us that, we're all, I think everyone involved with CLU, we're all in touch with the problems out there, and you want to fix them today. We don't, we don't want to wait till tomorrow, but it's getting there. And certainly folks like you are making a big difference, and the students at CLU. Every time I log into the course site and interact with my students, I reminds me that there's a lot of force out there for positive change. But I wanted to go back to one of the things you just mentioned, which is corruption. I think that's really interesting. We have David, who's leading now the ethical leadership program, and well, I could say lots about it, but I'll let you say what how did Kenya is, I think, a fairly corrupt, somewhat corrupt country, and did that cause problems both within your staff and in your interactions between Juhudi Kilimo and the other companies or government that you needed to deal with? And how did you navigate that?
Yeah, and it's really a sad reality of life there, and it's at every level of society and policy. It's all over. And I thought it would be more of a barrier than it was. I think maybe it's just specific to the company I was in and the industry. We didn't have to rely on a lot of government contracts or government partnerships or interference. It was really, we could kind of push under the radar for a while, and then as we got large enough, we could fund ourselves and sustain without having to interact with any government officials or anyone else. But that being said, it was still a struggle just within the company. There's so much social pressure on our staff to abuse their positions as a loan officer, as an accountant, as a finance officer, to take company money and to give it out to family or friends. And it's a tough sort of dilemma for a lot of our staff who have very needy family or friends, and it's just quick, easy to grab some money here, sign a check there, and maybe the company won't know about it. So we were constantly battling that. And I guess what was really tough to see was the younger generation, some of our best young managers and leaders coming to this and either stealing from our clients or stealing from the company. And the only way to really deal with this is to have a very strong zero tolerance policy internally and culturally, just to immediately let go anyone that takes any money, if it's $2 or if it's $100, and be strict on that. And then two is to be very have very robust systems and have fantastic real-time data and a lot of transparency, and then all the rest of the checks that are in the company, if it's internal audit or risk management group, that can continue to follow up on it. And one of the things I talked about in my book, this was my mentor, my Kenyan mentor, Lekki Mundo, who is one of our board members and was also one of the directors at the bank, a fantastic person who had dealt a lot with fraud. And he said, you'll get about 10% of your staff who are just going to rob you no matter what. They're going to be bad. And your goal is to screen them out initially, try not to hire them. You'll get 10% who are never going to steal, who are going to be fantastic no matter what. They're always going to do the right thing. And put those people in positions of authority and trust and internal audit and those kind of positions. And then the rest, the 80%, they're going to take money if they know they can get away with it. And so that's the big group to then manage, is to just let them know that either they're being watched or that there are a lot of checks in place, that somebody's looking over their shoulder, because it is going to happen. And us, in addition to all the rest of the financial institutions in Kenya, they all suffer from it. Everyone's had money taken, and we've had to write off whole portfolios and tons of money over the time. But I think that was sort of the worst corruption that we ran into in terms of the government. We really didn't have too many issues, small things here and there in terms of getting licenses and permits and getting our staff thrown in jail because we had clients who would call the police and bribe the police. So nothing too major.
I think your definition of major kind of changes is you have some perspective on this, but getting staff thrown in jail, I would count as major. But I guess
the rural jails and the
rural jails.
Pretty friendly. Yeah, it's not. They weren't very harsh.
Yeah, I guess each place has its own part of the culture. But so as I'm listening to you, Nat, it seems like a lot of the model itself you had was pretty well proven even when you started, right? A lot of things about the basic model, but then as you're taking it to this massive scale to 20, 30 plus thousand farmers, in a lot of these challenges that you had, it's really around execution and operation. And that's something that I know you can't just learn as an MBA, but it's also more than just you as a CEO. How did you build out your management team, and how are they doing now without you?
Yeah, and that's, I think, if you look, a lot of businesses, especially a lot of social enterprises, it is very tough to scale, and I think a big part of that is the people, is trying to attract the right type of talent, and then to build and develop that management, that middle and upper level management. All of my peer companies, all my friends who are running companies out there struggled with that, and it's tough, because as soon as you get a young manager who's showing promise and is doing well, they're going to get pitched by one of the banks or one of the big multinationals or nonprofit organizations that can pay 2 or 3 times the salary of a social enterprise. And then the other option is to go out to the market and pay more and poach back or poach from others. And that's tough, because they bring a lot of baggage. So I guess really being deliberate in how you plan for that scale. And we leverage a lot of technology to try to improve that efficiency of all of our staff. But at the end of the day, it's a company with a culture, and bringing in young people and making sure that they have the tools they need to succeed, and grooming them for management, and then having the training for the management to allow them to be more efficient and effective. It's all the soft skills. It's all the stuff, you're right, you don't necessarily learn in school, and kind of have to pick up along the way. And I'm sure a lot of other services companies face this around the world, but it was a big challenge, definitely. And I think we didn't quite get it perfect, but I feel like we were able to get it enough to that we were sustaining the growth that we had. And I think that was frustrating at times for me, because I wanted to get to 50 and 100,000 clients, and we had the money, we had the systems that we could scale, but the only constraint was our staff. And I had one really good investor who said, don't rush that. You have to let your staff mature and develop and grow and build those skills. And that's not something you want to push them on, because if you go too quickly, and then they're suddenly over their heads and they're not able to manage the volume that they have, and that's when you run into trouble.
Yeah, that's great words of advice. And Anita, you said you wanted to get a comment?
Yes, Nat. Obama believed that by establishing a program like the Mandela Washington Fellows Young African Leaders Institute, that it's the current young group of individuals that would help turn the country from unethical into a stronger economy, stronger ethics. And so you were talking about your experience. And while I was there, I had recruited one of my former fellow students that I had taught in Texas, who was back in Africa. And I thought, let him come in and co-teach with me. He can talk from a perspective of on the ground, and I talk from a more of an academic perspective. And while he was there at his company, someone stole $1,000. And he was so upset, because this was an employee who he had groomed and who he had worked with and who he trusted and believed in. So is this idea that Obama has, which is bringing in this whole new generation of young African leaders who want to see a change in Africa and in their own countries and in their own communities. Do you think that that's possible, that we can turn around some of the unethical fraud and the major issues that are really preventing the different countries to progress?
Well, I certainly hope so. And I'm familiar with I think they're calling it the YALI program, the Young African Leaders Initiative. And I had a few of my employees apply for the fellowship too. So I think it's a great program, great initiative. If there's anything that really kept me going, there when, and especially in those times of fraud, and that's the worst when it's someone that you've recruited and trained and had so much promise, especially if it's a younger person, and then turns out to get, not what you're hoping and just disappoints you. There are so many young, smart, ambitious, hardworking entrepreneurs and just young professionals in Kenya that are just looking for guidance and looking for leadership. And I think it's one thing to empower them with the skills and the models and the ethics, but what's really missing is those role models. Who do they look up to in Kenya when all of the leadership, all of the MPs, all of the presidents, former presidents have all been involved in this corruption, and it's so socially accepted. Where do they turn? And the hope, I guess, is that seeing people like Obama and having access to other role models potentially outside of Kenya that they can look up to. That's the model for them to follow. But I think until that's in place, it's going to be really tough to change. It's so deeply entrenched, I said, at all levels. Either it's got to come from the bottom, or it's got to come from a really strong, position on the top that doesn't tolerate it anymore. But I don't think we're there yet.
Yeah. Well, but I think one thing that again encourages me is just seeing is the times I've been in East Africa, there are, like you say, Nat, so many young people that are just hungry for opportunities, and I think there are a lot of Kenyans that are also looking for change, and it's going to take a while, but I think there's some good momentum and an awareness of how being connected to kind of the global movement on some of these things and the opportunities, if you can play in kind of the global playing field, it's a different game. But I wanted to also mention a little bit. So I had mentioned to you, Nat, that we have at Claremont Lincoln, we have the Claremont Core, which is this the 4 areas of mindfulness leading to dialogue leading to collaboration, and collaboration leading to change, which is how you can get some social impact. So can you say a bit about more about the collaboration part? I mean, was Jehudi Kalimo, who were your partners in this? How were you able to scale up through partnerships and things?
Yeah, it's a nice model and a nice progression way of I think thinking about change. It's daunting. I mean, there's so many challenges. So if you're in there starting an initiative or starting a company or a social enterprise, you can't just focus on one area. So for us to only focus on providing farmers with loans, that wouldn't have gotten us anywhere. We had to broaden it and to look really at what is it that our farmers need to be successful. And one is the training and the knowledge. Another is access to markets, and another was sort of the risk management and insurance. And we used partners for all of those. So we provided the finance, but we worked with a third-party insurance company who then insured all of the cows in case they died or got sick, and there was a payoff there. We partnered with both with nonprofits and with local government training officers who would provide a lot of the training, because that was tough for us to then kind of do on our own. So I think being able to really leverage partnerships and to build those early on can be very powerful. And I wish I was better at doing it. I have a section in my book about how I failed at a lot of the partnerships, especially with working with some of the larger corporations. Acumen Fund kept pushing us to work with Unilever and GE and and some big institutions that had lots of resources, lots of people, lots of expertise, and strong foothold in the region. I couldn't get them going. I think it was just different cultures, different perspectives, and different expectations. But I think that's a powerful model too, is if you can create something that's valuable and then connect it to one of these larger companies. In theory, they could help you scale, they could help help you grow, access your funding, all kinds of those things. But it takes a lot of that dialogue, as you're saying, a lot of that kind of sitting down and looking at what are the competing interests? What do we have in common? Does this make sense? And how can we now work together for that shared goal? And of course, we were very engaged with our clients, with our farmers. You can't just, work through this and work with them without also bringing them to the table and having them involved in that discussions. That's where I think a lot of the banks made the mistake, because they treated the farmers sort of as this third-class citizens who would track right into their banking branches. And so there's this resentment to the farmers that they're poor and they can't take a loan and no one wants to work with them. Whereas we really treated our farmers with a lot of respect and called them our clients. And we would travel to their farms and their homes and provide them with the services there. And really that was part of our service that I think resonated very well with the farmers.
Yeah, great. Well, I think but part of the partnerships too is don't be hard on yourself for not having those partnerships, because if it wasn't meant to be, if it's too much of a force fit or you have to give up too much to work with a big name like Unilever, there's also some huge risk there. So if it wasn't right, you can't compromise, or you have to find the right balance there. So there might be a good reason why those partnerships didn't happen too. So we're starting to, as we start to wind down, I have a few more questions, but I do want to make sure that the students have a chance. Just feel free to go off mute and ask your questions. We had Les join in also partway through. Feel free to go off mute if you have any questions for Nat.
Hi, Nat. This is Josh Polk. This is more of a general question. As a student for social impact, having the opportunity to speak with somebody that's had success in the field, is there any particular specific advice that you would give to a future social entrepreneur that you feel would be a feather in our caps to have at the beginning of the process to help us with future success?
Yeah, and that's sort of thanks for the question. Putting myself back in my shoes when I was starting, two of the things that I really believe a lot in is, one is just persistence. I think that's, you'll run into other entrepreneurs or anyone who's started anything, that they go back to that, is just being able to push through and not seeing walls as ends of the road, just thinking about other ways of getting around it. I can't tell you how many times I thought, we were done, we're over, we've got 2 months of funding left, no one wants to give us money, or we've got this huge IT failure and we've 30% of our loans are suddenly bad and I have to report this back to our investors. I just thought the world was ending and I thought there's no way around this. And just to be very, dig deep and to push through those and work out the small issues and to just get resourceful and creative and get around some of those challenges, because it is going to be hard and it's going to get harder. And so just to be able to have that, passion to push through all that. And then I was also very, very open, very transparent. I think that never hurt me. If I had a problem or something, some bad news, first thing I would do is get on the phone with all my lenders, all my investors, my management team, and say, hey, look, this is the problem. This is what we're running into. I want to let you know early, versus kind of letting them find out later. But hopefully that'll help. And again, if you're looking to start a social enterprise, I'm not trying to make money on this book, but I do think there's a lot of good information in that book that may be of interest. And you can skim through some of the personal stories and maybe focus on some business stuff. But I think, just to focus on systems, be really particular on the investors that you pick. There's a lot.
Andy, I wanted to make a comment. First of all, please be sure and post the name of the book again, and so that we can share that with all of the students. I think that's a great idea. And one of the things, if I could, from a teaching moment perspective, what you're talking about, what you were just talking about, is passion. You never gave up. And that's truly a passion of yours. And that comes out by the fact that you said creativity, you said a lot of things, but it boils down to having a passion in what you believe and that you believe that what you were doing is right. And I truly believe that sometimes we as instructors, professors, those in the academia can't teach passion, but we can certainly show our students what passion is and let them identify their own passion through, for example, through our program. But you have been, you've shown us what that passion is about, and it's really cool. And I've really enjoyed listening to your story. It's just been marvelous, and thank you. It's not over, but I just wanted to make sure that you understood that that I really appreciate what you were saying.
Good. Well, thank you. Yep, you're absolutely right. Thanks.
Great. Other comments, questions?
One thing also, and I think we talked about earlier that I want to throw out there is there's a great organization called Kiva that does sort of the crowdsourcing peer-to-peer lending. So as an example of persistence, Kiva rejected me, I think, 3 times to be a partner to get money from them. And finally, after a lot of convincing, they agreed to take us on as a partner. But it was a great kind of first step. There were a lot of investors who were interested in kind of circling around us. But that really kind of got our name out there, gave us a little credibility. It was like no one wanted to be first to the party to kind of jump in the pool because they thought, well, if they're first and it's a bad idea, then they lose their money. It's terrible. But now that Kiva was in there, then everyone thought, oh, well, we can jump in there now too, and we're all in it together, so we can blame others. So I guess that's again, if you're looking for investors and funders, look at some of the crowdfunding and crowdsourcing options. I think that's a nice source of capital out there that's a lot of people don't consider, but they're a really big supporter of us. And you can give loans right now to Jehudi Kalimo too, if you want to help some of our rural farmers.
Great. Well, when we send up the follow-up, we'll put the link to the Jehudi Kalimo website and to your book and everything. And yeah, excellent. Other questions, comments from the class? Well, feel free if you have any. And well, I have at least one more question for you, Nat, to wind down. What's next for you? You left Jehudi Kalimo, you moved back to the States. Where are we going to see you in 5 years? Or
well, I've been taking a very nice, relaxing break in academia at law school. And compared to starting a company, this has been a wonderful vacation. It's been a lot of fun kind of being back into an academic environment. And but I don't think I'll ever lose that passion for social entrepreneurship, and now also working with other entrepreneurs. And so I'm sort of in between deciding whether or not to go and work kind of on the investment side and with a fund and bring some of that experience, or on a kind of consulting advisory side, bringing the law and the business together, or just starting another company. Those are the 3 directions.
So Nat, I have some great ideas for you. So
okay,
we can talk later. I'm really excited to hear this.
Great.
yeah, great. There will be no shortage of options for you, I'm sure, once you finish your law degree. Great. All right. Well, any last chance for anyone else to chime in with a question or
Certainly,
comment?
let me know if I can be a resource to any of you or all of you. And feel free to give my email address too, in addition to all the other links. Happy to answer questions or to bounce ideas if anyone else has follow-up. I really want to.
Thank you, Nat.
Great.
Thank you. That's great.
Well, yeah, thanks so much. This has been really wonderful, Nat. Chance for us to get some great insights into your personal growth and the growth of your company, and thanks to everyone else for joining in real time too. And so yeah, thanks so much, and have a great rest of your evening, everybody. So,
Great.
all right, take good care.
Thank you, thank you, Nat, and thank you, Andy, for bringing him to us. And Nat, we will be in touch.
Great. Look forward to it.
Great.
I'd like to agree with that. Thank you, Nat, for your time, and as well, Andy, for setting all of this up.
Great.
Thanks for staying
Josh.
up so late.
Thanks.
Thanks so much. Bye-bye.
All right. Bye-bye.
Bye-bye.